Welcome back, my friends. Thank you so much for tuning in. If you stack silver and you like your daily news unfiltered, uncensored, and unbiased, then you've come to the right place because I post daily videos. And speaking of uncensored, I posted a video earlier today giving new information on Trump's ballot ban. And as soon as the video went live, I got an email from YouTube telling me that they are restricting my video, that they removed the link, and that the video is shadow banned, meaning that it will not get recommended to anyone. The only people that will see that video is directly from my subscription feed, anyone who's subscribed to me, but you can't search for the video. It will not get recommended. That's why the video has like 2,000 views, where usually by now my videos would have 10,000 plus. I don't care about the video's performance view-wise. The whole point is that YouTube did something to make sure that video did not get more views. It was a great video. I put time into it. You guys can go check it out, but regardless, that's just the reality we live in. And I might have to make a Patreon or somewhere where I can post 100% unfiltered stuff where I couldn't post on here because my channel might get taken down. So anyways, I just wanted to mention that because I thought it was interesting and important to note, and I wanted to know what you guys think about that. But now let's dive into something exciting, some good news, because I found an article that hit the nail on the head of what silver really can do in 2024, beyond these very modest price forecasts of $30. We saw silver hit $30 within a couple of weeks in 2021, early 2021 from Wall Street Silver, but this article is saying, with constrained supply, rising demand, and a weakening dollar, we could see silver overshoot these forecasts. Overshoot these $30 marks? No, silver can go higher than that. That's what they're saying. And they dive into the bigger picture, the macro, and very well written. And I'm excited to share this. So let's dive straight into it. Silver is in a paradoxical position at the start of 2024. On the one hand, industrial demand for the precious metal continues to grow, particularly from solar and electrification sector, and supply remains constrained. On the other hand, total demand actually fell 10% in 2023 and prices remained stuck around $23 per ounce as the year drew to a close. Silver investors may be wondering how these two things can be true at once and what it will take for the gray metal's price to finally take off. According to Peter Krauth, editor of Silver Stock Investor and author of The Great Silver Bull, the situation is complex. It is very complex. I always talk about the silver rabbit hole. That thing is deep. But the outlook for 2024 and beyond remains very favorable, with the Fed set to provide even more upside than current projections are accounting for. And I quote, "To me, it's not the end of the world," Cross said this year's drop in demand. "What I think is more important, if you want to get a one number perspective on what's going on, is to look at the deficit. And the deficit is still high. It's not at an all-time high, but it's still the second highest on record. In fact, if you add together the deficits of the last 3 years, it's nearly half of the entire supply for this year." And I could even say the deficit is much bigger than what the Silver Institute is claiming, because the Silver Institute doesn't incorporate military and other sectors like aerospace in industrial demand. Well, military, that uses up a lot of silver. There's 500 ounces in a single Tomahawk missile. That doesn't include satellites and all of these other things that require lots of silver. And as we up our military heading into all these different wars, we're using a lot of silver for military. Actually, U.S. military raided our silver stockpiles. So not including that in the demand means the deficits are even greater. But anyways, Croft noted that the biggest drivers for this year's drop in the overall demand are jewelry, silverware, and physical investment sectors, which were due for some correction after the outside demand in 2022. And I quote, "That's not a big deal," he said. "Nearly all of these were at record highs or coming off record highs, so it's not completely surprising." If you look at jewelry and silverware in particular, India was this huge demand factor for 2022. So it's only reasonable that because they did so much buying last year, it's almost like they overstocked it's not unrealistic to see a little bit of lightening up in terms of global or the total demand. Jewelry was a big contributor to that. Silverware less so, but jewelry dropped about 50 million ounces, Cross said. And that's maybe 5% of the total demand, but the big one was net physical investment, which was down about 70 million ounces, from 333 to 263 million this year. If you add the two together, you're looking at about 12%. That 12% drop accounts for the overall lower demand, about the same percentage. Physical investment was off the charts last year, 333 million ounces, he said. And if you look at the jewelry last year, or the jewelry sector, also off the charts was 233 or 235 million ounces. These two categories were just so outsized compared to where they've been. So it's just not all that surprising that we're seeing these things come back down to earth a little bit. And the supply won't be able to catch up. And that's the main thing, is whether it's 1.21 billion ounces or 1 billion or 1.4 billion, regardless, the supply is never growing. It's stuck around 800 million ounces a year, 850 million on a good year, and I don't ever think we'll be dropping below the 1 billion market ever again. And I mean, if we exceeded 1.21 billion ounces, and we have the solar panel sector that's booming, EVs that's booming, all of these other sectors as well, with silver lithium ion batteries and AI chips and other discoveries that's coming out every day that need silver. And they're actually looking to, silver might be replacing platinum or palladium in, I forget what it was. I don't know if it's electronics, but, EVs, but silver, since it's so much cheaper than palladium, is going to be replacing that, which means it's going to be there's going to be even bigger demand in a whole other sector being invented, and that's only going to continue while it's all thrown away. But that's just that's a little sliver of context to throw in when someone's going to say, oh, demand dropped a little bit this year. Did it really? And are those numbers actually accurate? Because we also had to revise the Silver Institute's numbers, and because 200 million ounces just randomly forgot to be added in, and they had to revise them. So if you look at supply, let's move right here though first. So Cross said the deficit represents the true net position of the market that it's in, and the data on supply side of the equation shows that mining and recycling won't be enough to meet next year's demand. If you look at supply, it's very telling that mine production is down 2% when demand is at second highest level on record, and recycling is expected to grow only 1% this year and will have little impact because it's maybe 15% or so of the overall supply. And that's another part a lot of people don't understand. Recycling doesn't even put a dent in this situation. And not only are we continuing each year annually to break record, not even if it's record breaking, just have hundreds of millions of ounces in the red, that means we're 2 years behind, because last year we were hundreds of millions of ounces, but we haven't caught up from last year. So then adding on this year even more hundreds of millions of ounces means that we are just rapidly putting ourselves in an unreachable position. We are way too deep in the hole, pun intended, to ever be able to catch up with this type of demand, especially since the demand is going to keep growing. So if you look at supply, and he mentions right here that the supply side of the equation shows that mining and recycling won't be enough to meet next year's demand. If you look at supply, it's very telling that mine production is down 2% when demand is at second highest levels on record, and recycling is expected to grow only 1%. I think the attractiveness of pulling that silver out of people's hands or inventory to make it to recycling is hard to justify. And that's so true. I mean, gold, yes, because gold is 80 times more valuable. People are willing to scrap gold out of laptops and cell phones, or scrap their grandma's jewelry drawer after she passes, because it's worth it. A necklace could cost you could get $600, but a silver necklace, what, $2? Taking hours to scrap silver out of laptops? No. Nobody's doing that. Plus, most gold is used for jewelry and bars and stuff. So, of course, higher recycling rate. Where silver, it's in electronics. Nobody's scrapping silver out of this stuff. It's not worth it, so it's thrown away in landfills and never to be recycled. So I'm glad he brought that point up. It's just hard to justify given the price, right? Why spend so much time recycling when it's used in these objects that are so hard to get the silver out of when the price is so low? So I think that will pretty much max out its current level around 180 million ounces or so. And then a single silver mine only pushes around 10 million ounces annually. Like Phillips Baker, CEO of Hecla Mining, Keith Neumeyer, CEO of First Majestic Silver, I'm pretty sure they said, mistake me if I'm wrong, they said that their mines only push out around 10 million ounces a year. 10 million when demand is well above a billion. You know, a significant bump in mining production also isn't in the cards, right? I mean, that's another thing. I'm glad that he really does look at all the variables. He really does. See, this guy gets it. Krauth pointed out that when Bank of America Global Research surveyed the top 13 silver producers about their supply outlook earlier this year, the consensus was basically, we're not revisiting the 2016 highs in mine supply for any number of years going forwards. That is scary. That is scary. There are just too many challenges when it comes to funding, permitting, building, plus finding it. And all the constraints of bringing a new mine to the market are there, just getting tougher and tougher. Why are they getting tougher and tougher? Let me tell you why. Protests. Most recent silver mine that was going to get up and running was in Canada, but it got protested and shut down because they said the mine was going to contaminate groundwater, so they shut the mine down. Ironically, silver purifies water, but, you know, I just thought that was ironic. They're protesting a mine for a metal that purifies water, which they're saying is going to contaminate the water. Of course, the mine would contaminate the water. It's just funny because silver does purify water. So anyways, the mine supply is really over 80%. 80% of total annual demand. So when mine supply is not going to grow, yet we have all these very realistic forecasts that demand is going to continue to grow in a very healthy way, that the deficits are going to stay very much elevated for years to come, I have just a hard time seeing how supply is ever going to catch up. It won't. It won't. And investing 101, low supply, high demand does what? Shoots the price up. The demand forecasts have indeed been high. A report by Oxford Economics for the Silver Institute projects total demand growth 42% between now and 2023 or 2033, which is double the growth rate of last 10 years. Even demand from jewelry and silverware, which pulled back so dramatically in 2023, is projected to rise by 34% and 30% respectively in the coming decade, and these two accounted for 60% of total silver demand this year. Krauth said that even with the projected slowdown in a global growth in the first half of 2024, he still expects some recovery for jewelry and silverware demand in Asia. And I quote, I don't know Southeast Asia, places like Bangladesh and Sri Lanka, but they do accumulate silver and they do see it as money, he said. I do think recession is likely next year, so I do think we're going to see some ongoing pressure, maybe not a huge bounce back on jewelry or silverware. Where he does see an outsized recovery in 2024 is from the investment community. I do think that net physical investment is going to surprise somewhat to the upside, Krauth said. Demand was at 163 million ounces this year. I think we're probably looking at high 200s, maybe 282, 290 in terms of net physical investment for 2024. And then ETFs, I think that we're going to see a surprise there as well. Even if we continue to see a fair bit of softness in jewelry and silverware, I think both sides of investment, net physical investment and ETFs are going to surprise strongly to the upside and help push overall demand higher next year. Krauth acknowledged that while a significant economic slowdown or a recession would likely boost investment demand, it would also be expected to negatively impact industrial demand, silver's strong growth sector. And that's a good point. That's a good point. That's a very a messy point because there's so many angles, and I'm sure he's going to go into some of this. But he says, I don't want to discount industrial, he said. And I quote, some people will say, if we get a recession, is that going to impact silver? Question mark. I guess The short answer is potentially yes, but probably less than we might expect. A lot of the reason for there's so much growth and support for solar and these green transition trends are going to continue because they're all mandated. Solar is going to continue to surprise on the upside, and that's a good point. We're not talking about we're talking about things that, regardless of a recession, are going to grow. EV companies are still going to be making EVs. Solar panels, we're still going green. That's mandated stuff. We're still going to be making silver lithium-ion batteries. So yeah, it's not in the case of infrastructure and things that normally, when you say industrial demand, would be talking about. The ongoing strength for the solar sector is one of the common themes in commodity forecasts. And this is talking about banks' outlook supports strong case for silver prices. Banks are accumulating boatloads of gold and silver. So the solar sector is one of the common themes in the commodity forecast from investment banks. Analysts at TD Securities said they believe silver prices could see a difficult start to the new year, but lower rates, rising industrial demand, and the return of investor interest will push white metal to outperform in 2024. So, they're going to say stuff like it's both a monetary and industrial metal. We know that. So let's look at some actual numbers. So he says we could see the white metal target $26 mid-2024. Lower interest rates, firmer physical investment, ETP purchases, and then he goes into $28 in the first half of the year, and second half we could see as high as $30. And then JP Morgan commodity analysts were even more emphatic about their case for silver prices. They predict that silver will be among the few areas of strength in the broader commodity sector. So JP Morgan says $26 by mid-year and then $30 in 2025. I think that is very, very modest. And if anything, they're saying this to try to keep the price low. Like Andy Schechtman says, price is the greatest tool of misdirection. JP Morgan owns the most. They own more precious metals than any other bank, so of course they want to keep accumulating. We actually had record-breaking. We broke records this year for banks across the world buying gold. We've never seen a year since I think 2000 where we've seen banks across the entire world buy this much gold annually, and there's a reason for that. So then they also mentioned Fed cut rates, dollar decline could see silver skyrocket out of a recession. And he said investors need to keep in mind that even the latest forecasts from banks and Silver Institute are based on data up until November, so they don't account for the latest projections from Federal Reserve. Let's stop it right here because he says, and I quote, if silver is going to be a big beneficiary, then we're going to start to bid up silver. So silver starts to outpace gold in that case. Yeah, I definitely know, I can say pretty confidently that silver is going to start outperforming gold as the gold to silver ratio is extremely high. Gold's up at, record-breaking prices, and silver is not even half of its all-time high. And the gold to silver ratio is going to have to correct back down, meaning that silver outperforms gold. When the gold to silver ratio goes down, that means silver is outperforming gold. When the ratio goes higher, that means gold's outperforming silver. And that's why the ratio is high right now, because gold has been rising and silver really hasn't been. So anyways, I'm going to wrap this video up here. I know this is a lengthy video. Hopefully you stuck around. If you have, thank you. I appreciate you. Make sure you like the video, leave a comment if you wish, and share it. Hopefully you're already subscribed because I post daily. And anyways, I appreciate you all for tuning in. I really enjoyed this article. Thanks for tuning in. This is Silver Slayer. I'll see you guys tomorrow. Peace.